move our focus now and take a look at the financial news as driving the Nigerian fixed income and forex market. Now, for that, we've joined by Nwabueze Okonne, who's a trader at UBA. Nwabueze, thanks for your time today. Thanks for coming on the show.
Thank you, Didi.
Let's move on now. Let's take a look at how the naira is trading today. I mean, we saw CBN auction $580 million through the WDAS this week. Now, of course, this gives an indication that we are not seeing enough flows from foreign investors. Now, of course, if this trend continues, this could possibly lead to a weakness in foreign reserves, which could trigger a confidence crisis as to where the naira is headed.
Interesting. Yes, you mentioned CBN actually did offer 600 million, but the take-up was 580, showing that there was a bit of a slowdown in the amount required by the banks in terms of funding for the FX requirement via the CBN window. Interesting also, we saw the rate at the CBN window gain 1 kobo, closing at 155.75 from Monday 155.76. That's a 1 kobo appreciation. In terms of reserve level, I don't think that where we are now and where the currency is trading and what the CBN is offering in terms of the amounts that they put on sale on the bi-weekly auction, I don't think at this rate and at this pace it's going to give a cause for serious concern. I don't think so. I think that overall you're going to get the offshore guys still coming inside. I think you're going to get other alternative sources of FX still coming to the market. I think typically the quarter end demand that comes in terms of the end users for Forex, we've seen those demands filtering into the market, and as such we've seen the naira weaken to an extent. So really, these are seasonal factors in my opinion, and I don't think that it's going to cause so much of concern in terms of people moving out of the country because of the reserve level. That's not my case out scenario for the depreciation that we've seen in the currency. Overall, if you look at the currency trading for this week, the trading sessions from Monday till today, currency has been relatively flat, opened at 158.20 in the interbank market and is closing at around that level of 158.20. So really, it's not been a shocker in the interbank market as we've seen for the last couple of weeks.
What about going forward? I mean, obviously, as we move towards the end of the week, what are your expectations for the naira?
I don't think the naira is going to trade much above out of this range. I actually envisage that we might get a bit of naira strengthening into the close of the week. I think we might see naira maybe close the week around 158 levels, even or sub 158. But overall, I don't think that anything is going to push naira out of this naira range that is traded from the start of the week.
Okay, now there was some expectation that yields in the T-bill market would climb further today. I mean, we saw an OMO auction today. We saw yields go from 12% to 12.5%. It's definitely good news to see some OMO auctions this week. It would be great if you could talk us through the OMO auction that we had today.
Our interesting OMO auction from the start of this week. Major auctions that are done for yesterday and today. We saw the range yesterday doing sub 11 to 12%, and today we saw it crossing at 12.5%. Well, it's overall good news for the investors. Yields climbing up. It provides a bit of more attractiveness in terms of asset returns for investors and for the offshore guys also. So I think those are the elements that we'll see, or those are the factors that we'll see that will continue to prop a support for the currency. For now, in the primary markets, the results are out. Yields also up. About 100 basis point from where they closed, 100 to 50 basis point from where they closed at the previous auction. Not surprising in all these dynamics that we've seen, really, because what else is expected to push the yields further low? There's really no factor you could look about in terms of economic indices that should support yields going down further than where it already touched in the last 1 month, 3 weeks and stuff like that. So really seeing yields back up at these levels, interesting, encouraging. And we don't think that, even though we might see a little bit more uptick in the yields, well, we don't think that it's something that's going to push into the excessive levels of the 13% for now. That's our opinion.
Now, we're expecting 300 billion naira in treasury maturities tomorrow. Now, that's obviously expected to have an impact on liquidity this week. I believe we're also expecting another auction this week. It'd be interesting to know how you see the yield dynamics for the maturity and auction going forward.
Yeah, for the auction and the maturity coming in tomorrow, net of what's coming into the market is about 260 billion naira. Auction results rates are already out. We have 91 days closing at 11% and 182 days closing a little bit above 11%. I think the market has priced in those factors that we're seeing a bit of rising yields. But interesting to note that while you have the short end rising yields at the short end, the fixed bond market, which is out on the 1 year into the 20 years, is slowly picking up some bidding interest. I mean, we're seeing across the curve, we're seeing the bond market, the yield lose between 2 to 9 basis points across the curve. So it's a dynamic because on the OMO and the short end front, you have the CBN needing to mop up liquidity, but in terms of real investors' appetite, in terms of portfolio managers and what they will do in terms of where they want to do strategic investment into, you look at the bond space, you see that interest still exists there, and it seems to be some pickup on that front.
And how would you advise a fixed income investor to play the yield curve? I believe that we have an inverted yield curve now, and we've seen T-bill, the market trading significantly higher than the bond market. And of course, traders are waiting for the next bond auction.
Obviously, I still think you have values in the T-bill market. Depending on what your portfolio risk assessment is, I think you have value in the T-bills market. I think continue to play the T-bill market for now as a major in the major size of your portfolio will pay off better. But overall, I still think across the curve, you got value all across.